FutureTrend channel is glad to welcome all of our subscribers. As usually, we start our analysis of major currencies for the date of 6th of July 2018. I think that it would not be a secret if we tell that the two important things now are bothering foreign exchange traders. The first one is trade wars between the economic powers, especially between the United States and China. And as you know, today is the deadline, because deadline of so-called imposing of new tariffs against Chinese goods that should be imported into the United States. And at 4 o'clock GMT time, Greenwich time, that kind of tariffs should be implemented. And of course it will be very interesting how Chinese authorities will respond to such kind of measures. As you know, these tariffs amounted about $35 billion. And by the way, as you look at financial markets at the moment, the financial markets more or less calm despite of such kind of worries associated with full-blown trade wars that could happen in the nearest future in case of retaliation measures, or in case if United States President Donald Trump decides to implement new measures against some other countries, and as well as Chinese authorities with more tariffs. Another interesting topic is of course economic agenda, because today we have employment report from the United States as well as from Canada, and of course the United States ones should be much more important. The market will be very interested to analyze the situation with United States non-farm employment changed, with a very low level of unemployment rate, which is rather good for the United States economy at the moment. And also the market will be concentrate its attention on average hourly earnings, because this kind of barometer is a very good barometer to analyze inflation expectations in the United States. All in all, we still keep our long trader strategy in the euro-dollar initiated at 115.50, because from technical point of view we continue to suggest that the euro-dollar should remain above its barrier located downside barrier located around 115, because as you could see here formed a kind of longer term head and shoulders pattern, and in case of break below 115 it could have really dramatic consequences for the euro-dollar, because in that case we should really concentrate on the downside, and longer term run even could return to the lows of 2017 located around 103.40. At the same time, to the contrary to this idea, break above 120, break above 119.84 where lies moving average 200 daily line, and especially 121 should return the pair to its underlying, not underlying, but to its uptrend that was prevailed during the beginning of 2018. But that could happen only in case of subsequent and successful closing above 121. As regarding some other currencies, the dollar-yen should remain more or less stable, because this kind of pair is between the risk aversion sentiment, the risk aversion fears associated with current stance on trader policy from the United States, but at the same time better United States economic numbers should support the dollar yen. Here we acknowledge two important barriers. The first one is the longer term downtrend that's located around 111.60, and at the same time we acknowledge a kind of 2018 uptrend that's located around 110 at the moment. So the pair should be locked between these two barriers, and subsequent break outside of this barrier should lay the ground for another impulse in the dollar yen. As regarding the sterling, here from one point of view the sterling should remain supported because yesterday, for example, Bank of England had Mr. Mark Carney was sounded quite optimistic regarding the future of UK economy. He pointed out that current weakness of economic indicators in the UK should have a temporary effect. From that point of view, from fundamental point of view, the cable should remain more or less supported in the near term. At the same time, we should understand that the overall trend, starting from the highs reached in the middle of April, around 143.70, and the subsequent slump in the price of the cable to the lows registered around 130.54 in June. All in all, this kind of trend should remain intact, because only break above 137, as we suggest, as our team suggests, should return the pair to its bullish trend, but it's of course in the future. The dollar Swiss, that pair should remain also locked between its 2018 downtrend located at 99.80 and current uptrend located at 99.20, and from that point of view, break outside of that range should lay the ground for near-term direction of the dollar Swiss. As regarding commodity block of currencies, the pair should remain, as regarding the Aussie dollar, the pair should remain negatively viewed while trading below its 75.70 downtrend. The same applies for the New Zealand dollar, because current downtrend lies around 69.20. While these two pairs are below its underlying downtrends, this kind of pairs should remain negatively oriented in the foreseeable future. The dollar Canada, we already told that today is not just the release and the publication of United States Payrolls report, but also the publication of United States Canadian employment numbers. So for those trading in the Canadian dollar, they should pay attention to this economic release as well. And finally, some words about the Russian ruble, because we still suggest that Russian ruble should remain supported while trading above 61.50 against the United States currency, where lies 2017-2018 uptrend. And the euro ruble also should remain supported above its 2017-2018 uptrend that lies today around 72.15. That's why we suggest to buy a euro ruble, for example, in case of dipping below 72.20, and the same applies also for the dollar ruble, where we suggest to buy it on a possible retest of 61.50. We wish you a pleasant and profitable day ahead, as well as a nice weekend for you and for all your families. Bye bye. For now, it was your Future Trend channel.